Hey everybody, this is Jim at SP500chart.com. It's 4:30 on October 8th, 2014. What a crazy day. We're going to take a look at it after I remind you that the website in this video are for educational purposes only. Nothing stated at the side when the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. Let's take a look. Well, today's a day where we started off with weakness, and then we ended with a nice rally of greater than 40 points off the low. That is more than 2% off of the low that was set, probably around 11 o'clock or so this morning. Now, here's a couple things I'm considering. First off, I'm not really looking at that inverted head and shoulders pattern so much anymore. Let's see what happens if we get up to that neckline. We could still get some benefit from that if we take out that neckline area, which I'm going to have to extend, I think, because we've gone so far off to the right here. But what I want to show you is a couple of things. Once again, we are over this descending blue line. We got over it 3 days ago, but could not hold it. And both times we've gotten over that level, we came down to essentially the exact same place. Let me show you where that is. We'll snap a horizontal line right here, and you can see that almost right at about 1925 on the 2nd, and again today on the 8th, we bounced at that level. Guys, we could be, we might be setting up a little double bottom here, which could be a good thing. We won't know, however, until we get over 1980 by a decent margin, because that would be the definition of the double bottom. Here's dip 1, dip 2, and there's the high that was in place in between both of those dips. That's where you would define it. Now, to be honest with you, double bottoms and double tops, I don't see them that often on a 30-minute chart. They tend to be patterns that develop over long periods of time. We're talking about where the peaks or the bottoms, the tops or the bottoms may be many months or even years apart. So here we are. We just got two little bottoms here at 1925 that are about 4 days apart. Could work out. It's just a little unusual. So as we look at this, we see a couple of things. We see, once again, like I said, we're over this descending resistance line as we were 3 days ago. The difference is that 3 days ago we just barely closed over it, and today we're over it by more of a margin. Still not a huge margin, but by roughly 14 or 15 points, which is certainly a lot more than the 2 or 3 points we closed over it on last Friday. So what could a reasonable person look at this chart and expect? Well, before we get into that, let me just get rid of this, because I think that's running some interference with my vision. And let's throw one more short-term trend line up. By the way, we're also over this little 3-day descending pattern right here. Now that we know that's a done deal, we can get rid of those lines as well. I'm going to yeah, I'll kill that too. We don't need that. So this is what I would do. I would look for one more short-term resistance line to get broken as some additional evidence that that we are on our way to re-challenging our neckline up here. And that line is going to be right there. That's very close, by the way, to the to that little what's the word I'm looking for? The little peak right here that would define a breakout from that small double bottom. But I think this line right here is worth keeping on the chart, because obviously there was significant selling pressure here, significant selling pressure here, and here we are once again. We closed right at that line. So the question now becomes, do we encounter significant selling pressure again, or do we break out over this? If we break out over this, then I would think we would be almost assuredly on our way back over 2000. And these two little dips right here, if we can also surpass that level at about 1977, 1978, I believe we should be seeing a move based upon the depth of this pattern up to the mid to high 2000 teens. At which point you would expect follow through to at least test this line again. Now if we back out on the chart and we look at this in context with what I was thinking could have been an inverted head and shoulders, you can see now, oh by the way, it's kind of interesting, we again bounced pretty much on this green line, got underneath it just a little bit, but you can see that we've lost the shape of an inverted head and shoulders. So I'm not sure what I would call this. You know, some person might look at this and think, well, it was a cup and a handle, and we just need a bigger handle. You know, that doesn't look quite right either. So without trying to define this as an actual pattern, I'm just going to let the trend lines do their thing. I'm going to extend this out just a little bit. That could put up a fight around 1990. And of course we have our old neckline from what I thought might have been an inverted head and shoulders continuation pattern. We did not get down, at least not yet. We have not taken out that 1904 low. So I think we have not yet really satisfied any condition yet to call this a top, because before you can get a top, you've got to set a significantly lower significant low. I know that sounded redundant, but it is the right thing to say. You have significant lows, which this is one. This one right here is not. These right here are not. This is. Okay? So there's a significant low. This is also a significant low, but it's higher than this one. So if we can stay above this level now, roughly 1925, then I think there's a decent chance for us to set some new highs. But first things first, I think we need to get over this little line, then we got to go deal with 1990. But if we get to 1990, I think it looks like the handwriting is on the wall that we're going to come up and re-challenge this line once again. So guys, if we look at a 5-minute chart, is there anything really that great to see here? Well, you know, we just kind of see the same thing. Again, this level right here at about 1978 is important. If we can get up over that, I think we're in pretty good shape. And of course, if we can get over 1990, we're in even better shape. So as the day went, it just looks like that initial weakness. By the way, we did form once again a nice little inverted head and shoulders pattern at the bottom here, just as we had formed a nice little but smaller inverted head and shoulders right here. See, little dip, bigger dip, little dip, in addition to the slightly larger inverted shoulders pattern, head and shoulders pattern right here, shoulder, head, shoulder. Let's measure and see if this pattern made its target. I don't think it quite did. I don't think it met it. So we would measure our depth here from the point of the break. Well, actually, I stand corrected. That was an optical illusion. Would you look at that? We almost exactly made the target from that small inverted head and shoulders pattern. Look at there. And as a matter of fact, we didn't make any more than that. At least in excuse me. At least not on this go round. So, as you look at this chart, you can see it looks like we're a good positive move, but clear resistance either right at this line or at about 1978. Let's see if we can get some more mojo on this and get about getting up out of this territory and getting back over 2,000 again. So thanks for watching. Thanks for your time and attention, and especially thank you for your support.